Stop thinking too much about entering the market. Profit depends on the way you exit. Most top traders pay too much attention to the way they want to enter the market in the right time. This is why most of professional traders believe that timing the entry is one of the least important objects of designing a trading strategy. What you do after entering the market is the key in a profitable system. Welcome to Mini Traders. We have talked about problems of making a strategy like finding tradable market and timing the entry in our previous video. In this video, we want to complete the steps of creating a trading strategy. But before we start, don't forget to subscribe in this channel, click on subscribe button and the notification bell. We have lots of other valuable videos in the future. Don't miss it. First of all, let's talk about stop loss. Any trader without a stop loss is doomed to failure. This is something obvious, and I don't think I need to talk more about this. If you are going to trade without having any kind of stop loss, it's better to stay away from any financial market. But as a strategy for trading, which kind of stop loss we should use? We can put our stop loss close or far. Let's see cons and pros for each decision. If we choose a stop loss close to the price, we will have lower risk and amount of our probable losses in each losing trade would be decreased. But this causes less freedom for price, and price will hit our stop loss more often. On the other hand, far stop loss gives us higher win rate because stop loss is not reachable for price and can freely move without touching our stop loss. But if things go wrong, we have to pay more in our losing trades. So what should we do? How can we set an ideal stop loss? For doing this, we should choose somewhere between too close and too far. We should put stop loss somewhere out of reach of usual movements of price and not too much far from it. For our stop hits, we can use our re-entry mechanism if the previous trend is still on its way. There's a question here. How we can measure usual movements of price? Well, we have some great tools for this purpose, and we will know them and talk about them in next videos. Here is some very important rule. Be consistent with your stop loss. When you set a rule for your stop loss and you test it in a complete system, do not change the rules while you're trading. Reasons are obvious. You have tested a precise setup for acting precisely, and if you change anything while you're in real situation, you shouldn't expect the same results. Now, let's solve the most important problem of a trading system: exit time. As we thought, most of traders spend most of their time and effort on finding the best way to enter the market on time. They try so many ways, like breakout of the price, moving averages, across a complex of indicators and studies, and many other ways. But they don't get the result because they don't pay much attention in the way they want to manage and exit them. By now, we have learned how to find a tradable market and how to active the position and set a stop loss for it. Now it's time to manage it until we get profit. We have set a stop loss, so we are not worried about losses. We have a challenge to maximize our profit. We have two choices when price goes in the direction that we want. To get small profits and get out, or chase the price for its maximum rewards. Small profit is something visible and we can get out fast, but we have told that we should follow the trend. Which one is better? Here again, traders should choose an amount which is related to their stop loss and the way they get out with loss. Some studies show that most of successful traders have average profit to average loss amount about 2 to 1. Considering trading fees can give us this average nearly 3 to 1. And 4 to 1 is somehow a large number in this case. Now let's see some of popular exit strategies used by traders. Some of traders buy something and hold it for a long time for greater amount of profits. It needs you to be patient when you're experiencing large drawdowns. It needs good amount of money and discipline, which most of us as retail traders don't have. Some of traders prefer to exit in a specific target. They set their positions on a stop loss and take profit levels, and they wait until one of them hits. It seems good, but it has some disadvantages. We can't determine any target by any degrees of certainty, and if prices go near our target and won't reach it, this will disappoint us. And if we close our position before the target, we decreased our average profit. Some of traders divide their positions into two parts and get some profit in a target and then let the price go forward more. There's another way for chasing the price, and it's stop trailing all the time. As price going in our direction, we can follow it, and after a while it hits our stop loss and we get our profit. We can combine these methods. For example, we can let prices go a little bit in our favorite direction, then we can change stop loss and make it closer, and if price could go forward, we get more profit, and if not, we can get out with good amount of profit. If it seems complicated, don't worry. We will see tools and examples of exit strategies in next videos. We should have a method to re-enter the market when our stop loss takes us out of the market, but previous trend is still on its way. An old way of re-entry was breakout of previous high and low, but it causes late re-entry and we miss a part of market movement. We can use oscillators like RSI or stochastics, I will explain how we can use them in next videos when we learn what are those oscillators and how they work. Why not staying inside the market instead of using re-entries? The answer is simple. Are you sure you are facing a retracement and market will not change its mind about trend? The answer is no. So it's better to get out in our stop loss and let the market to decide about its direction. There's an important point here. You may say this way of re-entering will cause lots of losing trades. Maybe you're right, but after a few losses, our trend detectors usually change their mind about trend, and we don't have to bear more losses. And finally, we should monitor our system. Most of systems lose their performance as markets change their behaviors. So we should keep watching our system and its important factors. In next videos, we will practically solve our system building problems. If you enjoyed this video, like it and subscribe for next videos right now. Thanks for watching, have a good time and bye.